This is going to be a very interesting session where we are going to recognize each and every value. The Indian Accounting Standard 16 should be followed for accounting of property. Now let's try to understand the definition of each and every factor. These recognition criteria apply to subsequent expenditure and factor. Good morning and welcome to the session 1 in Unit 3 in International Financial Reporting Standards. This is a very important chapter. Why? Because we are going to speak about the recognition and measurement for property, plant and equipment. This is going to be a very interesting session where we are going to recognize each and every value that has been spoken about the plant and equipment. Now moving forward, the first thing that we need to understand here is that the Indian Accounting Standard 16 should be followed for accounting of property, plant, equipment unless and other IAS standards, that is Indian Accounting or an IFRS, requires a different treatment. So the Indian Accounting Standard 16 is being specially prescribed only for the recognition of plant and property that has been given. This will not apply under the following conditions. Suppose it is a biological asset except that of the bearer plant, mineral rights and mineral reserves such as oil, gas, petroleum, regenerative resources, property, plant, equipment classified as held for sale. Now it has been held together. However, this standards applies to property, plant, equipment used to develop these assets. So once you start understanding this phenomenon, it tells you very clearly that the Indian accounting standards will not apply to the biological assets except bearer plant, mineral rights and the mineral reserves altogether. The regenerative factors, oil, gas, petroleum, we will not be using it. Property and plant where you have already put it for sale. So these are all the conditions where you will see that the Indian Accounting Standard 16 cannot be applied. Rest all of the condition. Whenever you are going to account for property and plant, IAS 16 is going to come into picture. Followed by the definitions. Now let's try to understand the definition of each and every factor that is being told. First one, property, plant and equipment are tangible assets that are held for use in production, supply of goods and services expected more than one period. So when I am going to use a property, I am going to use a plant, I am going to use an asset that is primarily going to be used for production more than 1 year, and that is going to be accounted in that particular period altogether. Followed by the cost is an amount of cash or equivalent or the fair value that is being paid in consideration to acquire an asset at the time of its acquisition. So at the time of the acquisition, what we are going to say, we are going to bring in the function called as cost. So when you are buying it and when you are going to take it into your fold, only at that time, that is the cost factor. Now, why this is important is that there might be several times where you would go ahead and say that what is the price of a particular plant or a machinery. But that one you might have not bought it. That one you might have not taken it into account. Only when you are going to take it into your acquisition, into your control, into your purchase altogether, that is when cost will come. So cost is the amount of acquiring the property. Cost is not the amount which is written on the paper just like that. Followed by the residual value is the net amount which the entity expects. When does they expect? To obtain an asset at the end of its useful value altogether. So at the end of the use of the asset, so whatever would be the remaining value, let's say that I have used a plant or machinery for last 5 years or 10 years together. Now what is going to happen here is that we will be using that particular value we will be using that final value as the property, actual value of the property. Carrying amount is the amount at which the asset is recognized in the statement of financial position after deducting any accumulated impairment. So what is the carrying amount? When you carry forward an asset or a property, that is the recognized statement of the financial position after deducting any accumulated losses that has been taken forward. So after deducting all the accumulated losses, then you will see the carrying amount. Next, we are going to talk about the fair value. What do you mean by fair value? It is the price that would be received to sell an asset or paid to the transfer a liability. Very, very clear. In an orderly transaction between the market participants and measurement date. So this becomes very, very important. Why? Because when you start understanding the fair value here, that would be received to sell an asset, which would be received in order to sell an asset or paid in transfer liability. So that is the fair value that you are going to get between the market participants and the measurement date. So the amount that is going to be finally received when you are going to put it in the market, the difference that you are going to get between that measurement date and the participants is what going to measure your fair value. Now, moving forward, the concept of recognition. What does the meaning of recognition talk to you? Recognition means incorporation of the item's business accounts, in this case the non-current asset. So whatever is the non-current asset that's coming into picture, that is the incorporate recognition coming into picture. So the recognition of property, plant, equipment depends on the two criteria. What are those two criteria? It is probable that future economic benefits are associated with these assets will flow into the entity. Cost can be measured reliable. So cost will be definitely measured as a reliable factor. These recognition criteria apply to subsequent expenditure and factor. So this is very, very important for each one of us to understand how has the cost occurred initially, what are all the factors at which they are being measured, and what is the future economic benefit that is associated. Let's say that I buy a biogas plant or I invest today in some, let's say, a green energy technology. So what is the future economic benefit of that green technology that I have purchased? That is where recognition will come into picture, because recognition will tell you at a given point what is the economic benefit to the entity. Just by investing, you are not going to get any money or return back. You need to calculate the futuristic prospect of that particular instrument or that particular plant or property altogether. So that is where you will be able to get the exact value, the exact measurement altogether. So that's why recognition is very, very important. Followed by initial measurement. Let's talk about initial measurement. So what is initial measurement all about? First thing, the cost of items of the property and plant comprises purchase price including import duties, non-refundable purchase tax, less trade discount and rebate. So whatever is the actual amount that is being paid on the bill by the organization, that's where the purchase price is coming into picture. Now what you need to do is that you have to include the import duties, you have to include the non-refundable purchases factor, and you have to less the trade discount account, cost that is directly associated with that asset in that particular location, condition necessary to be used in that manner. All these factors have to be intended by the management. Now, initial estimates of cost of dismantling, setting it up, the entire function until that property comes into actual use. Till then, whatever cost is being included in terms of setting up that plant, that property in that particular location will be included in the cost of that item. So that is why it is very, very important. Now, coming here, directly attributable cost includes cost of site preparation. What is the cost of the site preparation? Initial delivery and handling cost, installation, professional fees, employee benefits which are to be allowed in that, and borrowing costs as per IAS 23. So let's say I'm going to install a cutting machinery, or I'm going to install a robotic painting machinery. So starting from the site preparation, followed by the delivery and handling cost, then followed by the installation and assembly cost, the professional fees, the employee benefits that are associated with that, the borrowing cost of getting it into picture. All these things have to be measured in terms of getting to the cost price of the property or the plant. Followed by the initial cost. The initial measurement will also include training cost, administration, operating cost, the cost of relocating, reorganizing, cost of introducing a new product or service, including advertising factors altogether. Now, this is a very, very important factor that you have to learn. What is the training cost? Suppose you have to train a person on that, so there will be a cost associated with it. To run that machine, there is some cost. There are some administrative expenses that are governing that cost. There will be some initial operating losses. There might be cost of relocating or reorganizing to that entity or to the operation, cost of introducing a new product or service. All these things would become a part of advertising and promotional cost put together. These are all the factors that are associated with the plan, that are associated with the system altogether. So this is very, very important for each one of us to stand and to understand, because this is something which is direct cost. These are not something which is indirectly held. So whenever you get a property, whenever you get a machinery into your fold, all these things will start coming into picture. Followed by the measurement subsequent to the initial recognition. The first thing is that the standard offers possible two treatments. Essentially, we have to make a choice. That is how the asset is recorded and revaluation model. Now, however, we are going to apply the same policy to the entire class of property, plant and equipment. The cost model will carry cost less depreciation accumulated minus that impairment cost factor together. Revaluation model will carry the asset at revalued amount, the fair value at the date of revaluation altogether. Now, the revised IAS 16 standard makes it clear that revaluation model is available only. Let's underline that point. It's available only if the fair value of the item can be measured reliably. So what they say, when is the revaluation available? Only when the fair value of the property of that plant is available in the market, then you can go for the revaluation modeling. If it is not available in the market, if it is not going to be told, if it is not going to be shown at all, then automatically this revaluation model cannot be carried forward. We will go only with the cost carrying model. Why? Because the cost model carry will tell us that forget the depreciation part, forget the impairment losses, what is the real value of the machinery. Followed by, let's talk about the revaluation model in detail. Now, if you look into the revaluation model, the market value of land buildings will all be at fair value, the summary of existing in the line of business. Such variations are usually undertaken by professionally qualified valuers. Now, if you look in big metro cities like Bangalore, Chennai, Hyderabad, Delhi and all, you will be able to see that the land value cannot be just determined with the old rate. There are professional valuers who will try to estimate the fair value of the land, the actually per square feet altogether. So in case of plant and equipment, the fair value is usually the market value. Currently, what is the price of that particular equipment? The market value will tell me the fair value, and this market value, if it is not available, then fair value is estimated using the depreciation minus replacement cost. The frequency of valuation depends on the volatility of fair value properties in plant. The more the volatility comes there, the more frequent revaluation should be carried on. This is why whenever we go for standard equipments and standard products in the company, the revaluation factor will come down. That time we don't have to worry at all. But then if you are not following that method, most importantly an item of property and plant, again and again we have to go into revaluation. we have to see the fair value. We have to come to a judgment or to a decision saying that, sir, this is the value at which we are trading. So that is why I would always say that more the standardized equipment, the revaluation cost will be replaced. We don't have to keep on revaluating. All the items within a class will be revalued at the same time, and preventive revaluation of certain effects are to be avoided, so that we cannot keep on rolling the cost from one end to the another end every year. We don't have to follow that methodology. What we are trying to do is that we are only trying to bring in a systematic procedure so that at any given point of time, the revaluation is done at the easiest method. We are able to get the fair value and we are able to record it in the book of accounts. Now, the IAS 16 will be required in the case of accounting for a revaluation, which says that in order that increase to be credited in other comprehensive income, suppose the land value has gone up, suppose your asset value has gone up, that has to be recorded in other comprehensive income. So how do you do it? Debit asset value, statement of financial position, credit other comprehensive income. So subtract the asset value and add up the comprehensive income. If the revaluation results in decrease, then the decrease should be also recognized in other comprehensive income to take up the balance factor remaining revaluation in relation to the account, to the asset. So debit other comprehensive. Why? Because this time it is falling down. The asset value is falling down. Debit all the profit and loss. Credit the asset value. So whatever is the remaining position there, that you credit it back to the book of accounts. Now, disclosure requirement. This is very, very important. Why? Because without disclosure, you cannot go forward in accounting. So what is the method that is used? The depreciation method is used. Useful lives of the depreciation, gross carrying amount, the accumulated value, impairment losses and factors are taken into account. Reconciliation of the carrying cost that has been taken into account. The property plant that has been pledged for securities of liabilities. All these factors are there. Any kind of contractual commitments or acquisitions of the property plant. Also, the amount of compensation for the third party items that has been taken together towards the property and equipment will also be measured here. With this, we come to the conclusion of this session. I hope and believe that this session was highly informative and useful for you. In the upcoming sessions, we will be seeing more about the IFRS standards in terms of accounting. Until then, stay tuned, stay blessed, and stay enlightened forever. Thank you once again for joining me on this wonderful session today.